Ether races 6% against Bitcoin as GENUIS Act puts spotlight on yield-bearing stablecoins. Analyst. Ethereum's Ether is outperforming Bitcoin amid expectations that the GENUIS Act will ban yield-bearing stablecoins. Ethereum's native token Ether, ETH, is gaining ground against Bitcoin BTC $118,345.22, as the impending GENUIS Act is likely to ban yield-bearing stablecoins that promise interest-like returns, according to Markus Thielen, founder of 10x Research. The Binance-listed Ether-Bitcoin ratio, representing Ether's BTC-denominated price, rose over 5.96% to 0.02670 on Tuesday, registering its best performance since May 13, according to data source TradingView. The upswing marked a bullish resolution to the multi-week range play and suggests continued Ether outperformance ahead. Ether's dollar-denominated price rose over 4%, topping $3,100 for the first time since February. According to Markus Thielen, founder of 10x Research, the key driver for Ether's price surge is seemingly the growing anticipation that the GENUIS Act, or the U.S. stablecoin bill, will pass, restricting U.S. stablecoin issuers from paying interest. That would potentially reinforce Ethereum's importance within the digital asset ecosystem, Thielen said in a client note shared with CoinDesk. Thielen added that the GENUIS Act has put the spotlight on Athena's $5 billion synthetic dollar USD, which achieves delta hedging or cash and carry arbitrage by shorting perpetual futures equivalent to the amount of ETH received from users as collateral. That's how it generates yield on USD. The long prevailing theory is that the shorting operation adds to bearish pressures in the futures market and caps basis, the gap between futures and spot prices. Athena currently represents about 4% of Ethereum's $26 billion open interest, and by consistently selling futures, it has exerted downward pressure on ETH prices, Thielen said. Athena has already reached out to the U.S. Securities and Exchange Commission, SEC, to seek clarity on synthetic dollars, such as the USD. The team reportedly argued that the synthetic dollar functions as a payment instrument rather than a security and falls outside the scope of the GENUIS Act and the Stable Act, which regulate payment stablecoin issuers. Athena is headquartered in Lisbon, Portugal, with new dollar inflows primarily coming from outside the U.S. So, it remains to be seen how it fits the evolving regulatory picture in the U.S. If Athena were to comply with the U.S. stablecoin bill, it could be forced to stop buying Ethereum altogether. However, the market may be interpreting this dynamic differently. ANA-USDT continues to rally, supported by rising Ethereum funding rates, Thielen said, adding that the USD is not offered in the US and so Athena is not at risk. Athena has earned a total revenue of nearly $300 million over the past 12 months, trailing behind Tether, Ethereum, Circle and Solana, according to data source Token Terminal. The protocol has also earned a fee revenue of $15 million in 1 month. Athena is performing exceptionally well with the rise in funding rates, which is encouraging numerous hedge funds to set up funding arbitrage strategies. We anticipate this will translate into increased inflows for Ethereum ETFs, Thielen told CoinDesk. The GENUIS Act, which got the Senate approval in June with bipartisan support, is expected to head for a floor vote in the House by Thursday. Read more. U.S. Senate passes GENUIS Act to regulate stablecoins, marking crypto industry win. 8:23 Universal Time Coordinated. Adds additional comments from 10x Research's Thielen. Omkar Godbole is a co-managing editor on CoinDesk's markets team based in Mumbai, holds a master's degree in finance and a chartered market technician, CMT member. Omkar previously worked at FX Street, writing research on currency markets and as fundamental analyst at currency and commodities desk at Mumbai-based brokerage houses. Omkar holds small amounts of Bitcoin, Ether, BitTorrent, Tron and DOT.